My name is Jason Allen. I'm a realtor based in Palm Springs, California, and each week I do a market report. I focus on one of the four cities that I do most of my business in. This week it's Palm Springs. If you give me just a moment, I'll bring up the charts. I've changed my format a bit. Instead of relying on the charts that used to be available to me, I've decided to download data that I think is most relevant and then present it in a more traditional PowerPoint style presentation. With that in mind, it's going to be important for me to go over a few things, and I'm going to do this at every presentation. So if you've watched this once, you can skip ahead, just go down to the show notes and you'll see where you can click on the charts that are going to come up. Again, I'm focused on Palm Springs, but this information that I'm going to lead with as my introduction applies to all markets, regardless of where you are in the country. There are three things that determine the price of a home: property condition, property location, and market demand. We've talked about these before. I'm going to break it down a little bit more. With respect to property condition, you have objective measurements and you have subjective measurements, and I apologize for the error in the red box. Objective measurements are things like deferred maintenance, whether you've updated the systems, you've updated the kitchens and baths, if it's move-in ready, a fixer, and whether there's mature landscaping. These are things that are sort of fixed costs that a buyer is going to look at when they go to make an offer. And those are going to be somewhat relative to what else is in the marketplace at that time, available for them to purchase, and what has sold recently. Subjective measures, whether the property is personalized so much, whether it's dirty, cluttered, empty versus stage, and whether or not it evokes an idealized version of home for them. The second point is property location. Again, I apologize for the red box. Whether it's a busy street or not. Placement within a development. Is it all the way at the back of the development? Is it closer to the front? And then if the property is convenient to grocery shopping, medical facilities, that sort of thing. And then subjective measurements are things like, what do the adjacent properties look like? Are they well kept? Are they poorly maintained? Is the street and the neighborhood well maintained? Is it close to the buyer's desired needs? A buyer may need to be close to a freeway, might need to be close to a school, might need to be close to work, those sorts of things. And whether it evokes a sense of nostalgia or a goal that they're aspiring towards. The third thing that influences a property's value is market demand. As you can see here, the market demand is outside both the buyer and the seller's control. Large-scale influences include interest rates, politics, consumer confidence, the stock markets, unemployment or employment rate, and then unforeseen events. Buyer-specific influences that will determine market demand include a relocation, retirement, births and marriages, so a larger family, deaths and divorces, smaller family, work, desire for a different home. The point of that is that these things overlay to a market and will influence what the value of the house is. Measuring market demand is predicated on statistics that are available through the MLS. But the most common statistic that's been used is month's supply of inventory. I find this to be outdated. It offers little information and it aggregates fee and lease land properties in our market. And that doesn't really help a seller or a buyer to know that there are 8 months supply of inventory or whether there's 6 months supply. We used to say that 6 months was a balanced market. Here's the problem with this outdated metric is that it's based on an old time cycle. In other words, there was a day pre-computers when I would get a listing. It would take a week to process it, and everything's done on paper, a week to process it, then another week to schedule photos, and then another week after that to get the house ready, and then another week after that before it got into the multiple listing book, and then another week before the book went out. You get my point, that it was a much longer cycle. These days, I can sign a listing today, assuming the house is ready to go. I can have my photographer in there within a few days. I can have marketing materials done really quickly. It costs more to do quick, but it's possible. And then I'm on the market within a week. So all of that is to say that I don't think this works anymore. The better market statistic are what I'm going to show you next. I've created two charts that I think are a much better visualization of what's happening at any given moment. I call them the over-under asking price scatter graph and the pending rate bar graph. These are not available from my multiple listing service. I've actually had to extract the data, manipulate it a bit, put it into a spreadsheet, move it from a spreadsheet into Google, and then use AI to actually analyze the data. Again, I'm focused on Palm Springs this week. I'm going to start with Condo. So this is the sales price versus original asking price for condos in Palm Springs. Now, this is a time of a full year of information. But you can see that over the last year, most of the properties have sold under asking. That's the market we're in. Let me walk you through this. The red line represents the asking price of a property. The blue dot above or below or on the line indicates where that property sold in relationship to its asking price. For condos, 79% sold under ask, 14% sold at asking, and almost 7% sold above asking. To me, that gives you a much better picture of where properties are landing in the marketplace. Now, for any seller coming onto the market, your goal is to get above asking. However, that requires the property to be priced very attractive. There are buyers in the marketplace presently, but the key is to attract them to your property early. And in doing so, you ideally attract more than one party so that there's some competition that's involved. And the second chart that I've developed is the pending rate bar graph. Just as a reminder, a property goes onto the MLS once it gets an offer and the offer is accepted, and there are contingencies. Contingencies, once again, are ways the buyer can get out of the agreement: home inspection, loan, appraisal, and so forth. Once those contingencies are removed, the property is considered pending. And in 99.999% of the cases, a pending property will close escrow. You can see by this graph, our pendings for July of 2025 are down significantly. We peaked out in March. What does that mean? That means that while there may still be a lot of buyers going into contract, once into contract, many are falling out. More are falling out than we'd like to see. From a seller's perspective, that means that your property may go into contract and then fall out, which increases your time on market. From a buyer's perspective, it sounds like a lot of buyers are getting cold feet based on whatever information they're receiving from the property condition, their loan officer, the disclosures, and so forth. If you're a buyer in this market, I would have realistic expectations around what the property is worth. And just because you're at or above asking price doesn't mean you're overpaying for it. When you have the vast majority of properties going for under asking, that's pushing prices down. That's keeping the lid on prices. And if you're a seller, this is why having a buyer in contract and then having a backup buyer is so valuable. You don't get that if you've overpriced your property and you're discounting almost in a garage sale fashion as the time spins out on your listing. This chart is something I take from what's available to me, and it indicates that our inventory is up for condos in Palm Springs 12.5% over a year ago. However, it's down from the previous month and the month before that. And if we get into March, you can see we actually had more inventory than we do now, but that, going back to the previous chart, is where a pending rate and our sales were higher. And then unit sales year over year. In this particular case, we're up 10% from last year for condos in Palm Springs. It's positive. That means buyers are in the marketplace, and that's despite the fact that we have more inventory. Let's move into houses. For scatter graph, once again, Palm Springs houses over the past year. Same thing. You can see that most of the sales were under asking. And the specific numbers on that, 81% were below, 10% were at, and about 8.5% were above asking. This is where you as a seller have the most control. I say that because a buyer has clearly demonstrated interest in the property. They recognize they're getting a value. Everyone is out for value right now. Total number of monthly pending sales is down significantly in July. Now I want to pause here a moment. Historically, the summer was very good for sellers in Palm Springs and the Coachella Valley. Here's why. You tend to have fewer people coming into open houses or making inquiries on property, but people don't go out in 105-degree weather to kick tires. They're a committed buyer. So while we would have fewer buyers in the marketplace, we tended to see more serious sales occur. This does not bode well for sellers. It bodes very well for buyers. Inventory year over year, up 6%, not dramatic for houses in my opinion. And unit sales year over year is actually up 31% from June of last year. So that's very good. Again, there are buyers in the marketplace. My analysis is that it is absolutely a buyer's market. Sellers, choose very wisely whether you're going on the market at this time. I will be approached by sellers frequently that say, I don't need to sell right now. Selling is a process. I encourage you and I will work with you to determine whether or not this is the right time for you to sell. If you're selling a condo because you want to go to a house, in this market, that's almost a lateral trade. It's worthwhile. What do I mean by lateral? You're going to get less for your condo, but you're going to pay less for your house as well. If you're moving to a market where it's actually a seller's market, that may be something you want to put a pause on. And then for buyers, recognize there are fantastic opportunities out here right now. I would say that if you've been on the fence about buying, yes, prices may go down some, but now you're trying to time the market. My advice is if you're ready to pull the trigger, get with me, get with your preferred agent, and get out and look at properties, because I think you'll be very surprised at what's available compared to what has sold recently, compared in a positive way about what the values that you're going to see. And I wanted to end my presentations with commenting on the fact that Keller Williams is a worldwide company. If you are relocating here, I probably can assist you in finding an agent in your market. What's the value to that? That agent and I can be working in tandem as you begin your search here. Now, I can still work with any agent you have. That's fine. I just like to be in communication. If it's someone that I know or have worked with in the past, I know their communication style and their level of expertise. And a little bit about me. I started my career in real estate in 2017 with my license. I quickly affiliated with Sotheby's International Realty in San Francisco, where I worked until 2012. I relocated to the DC metro area and sold real estate in Northern Virginia after being licensed in both Virginia and the District of Columbia. In 2017, I moved back to California. 2018, I affiliated with Keller Williams here in Palm Springs, and I haven't been happier. Thanks very much for spending time with me. If at any time you'd like additional information about your specific purchase or your specific sale, just reach out. I'd be happy to have a conversation and prepare a report like this for you. Until next time, take care.